Hello, everyone. Welcome and thank you for tuning into the KredX podcast series, FinTech X. I'm Devang Mundhra, Chief Technology Officer at KredX, which is India's largest supply chain finance platform, and I'm happy to be your moderator for today's discussion. Today's topic is, can central bank digital currencies, which are also known as CBDCs, enhance financial inclusion, exploring opportunities, challenges, and impact of CBDCs. So allow me to introduce the topic. As central bank digital currencies gain traction globally, their potential to enhance financial inclusion is of key focus. While digital banking and fintech have made progress, millions remain unbanked or underbanked, particularly in developing regions. CBDCs offer a promising solution to bridge this gap by making financial services more accessible and affordable. However, their implementation also presents challenges, such as avoiding the creation of new barriers or exacerbating existing inequalities. This discussion explores the opportunities, challenges, and impact of CBDCs on fostering a more inclusive financial future. That said, allow me to introduce today's distinguished panel of speakers who bring a wealth of experience and expertise to share on this topic. We also have with us Mr. Sanjeet Kumar, who is the Executive Director of Resurgent India Limited, which is one of India's largest merchant banking firms. A very warm welcome, FinTech X, powered by KredX.
Thank you, Devang.
So now, without further delay, let's delve into our discussion.
The financial disintermediation concept,
Mhm.
what we are witnessing with the introduction of CBDC is taking forward that concept. So, in terms of credit, to some extent, with the introduction of bond market, some of those things has already happened. Something is already in progress. In the payment side, with the emergence of UPI, all these digital transition that is happening. So, but with all of it being rooted through the banking system. So people who didn't have a bank account, they are being left out of this entire payment mechanism. So CBDC is effectively allowing them that you don't need to have a bank account in order to do a digital transaction. I think to that extent, it is a step towards a disintermediation, which is a necessity. I mean, as the economy develops, progresses, the technology evolves, this was a necessity which was waiting. I mean, just to come in. And it's good to see that all banks, not just in India, the central bank RBM, but all across the central banks are looking forward to this concept. And so slowly this is picking up everywhere. The biggest benefit of it could be in the cross-border payments. I think there the transaction costs are pretty high even today. So I think once we have this system which gets evolved properly, and though international payments starts happening seamlessly through the CBDC network across the central banks, once they agree on these kind of mechanism, this will really improve and it will help the international trade significantly. Because the transaction costs in the international market, which is 5 to 6%, that can come down drastically, and that will facilitate a lot. So one aspect I definitely look at from a cross-border payments. Other is the necessity of having a bank account. As Ruiji also said, that so there are so many people who don't have a bank account, and to that extent, they are today being deprived of the digital transactions that is happening in India. So with the CBDC, they will be able to get into the system. They will start transacting, and a lot of time, even today, there are banking system is somewhat cheaper compared to the international market. In the international market, there are many countries where having a bank account, there is a cost involved. So every service is charged. And some of these things are already happening with the private banks, where the minimum balance requirement, those charges are there. So it is maintaining a bank account can become a costly affair. So if you leave out that you don't need to have a bank account to be able to do a digital transaction, that creates a lot of convenience. A lot of people who don't have access to the bank account can get into the digital transaction. I think that's already and that's the path. So it is clear that CBDC is the future. It will take some time to evolve, gradually get accepted all across. But this is the path, and I think the faster we move on this path, the better it is for everyone.
Right. So one point of discussion that is coming up is, like with CBDCs, end consumers might not need to have bank accounts. Like they'll have some wallet equivalent kind of thing which is directly given by the central bank, right? So the traditional bank infrastructure, and as Sanjeet ji, you're saying, like the financial intermediaries, like their role might become lesser and lesser, right?
Right.
But at the same time, today banks perform a very important role, right, in terms of providing credit and providing financial stability into the whole economy and ecosystem, right? So as the traditional banks, like let's say the CBDCs do start to scale, right, and traditional banks and their role starts to diminish, who takes over this role of credit availability and financial stability?
Okay, okay. Let me address this. So, this is the future. This is bound to come. So, it is important for banks to accept it and do the key role that they are supposed to do, which is to identify the creditworthiness of the borrowers. So, that is the key differentiator that they need to have. They need to develop. So, I must say that today a lot of banks are having easy money because a lot of these flow data which is available to them, they are making money out of it. So, it will push the banking system to evolve, to actually leverage their true strength, which is identifying the real creditworthiness of the borrower and lending to them and making money on it. So, effectively, it is very likely that with the CBDC, the cost of fund for the banking system will increase, because the lot of these flow that they are enjoying today, that might decrease. How much we don't know, but yes, it will have a negative impact on the flow that they are enjoying. To that extent, the cost of fund for the banking system will increase. So the interest margin that they have, that will shrink. So in order to maintain that, they will need to look at borrowers whom they can lend, make sure that their NPAs come down. So if it is just about the banking system, will have to be much more efficient in what they are supposed to be doing, instead of earning from the float that they are today enjoying. So it is a good thing to have, to make sure that the system improves with this kind of a impact which it will have. And I think overall system will improve. Nothing to be really concerned about it. This financial disintermediation, the way I say, this is the normal part of the growth that it is going to happen. The banks has to learn this and adjust to it. There's nothing more to be done.
Right. I think after a long time, there is some disruption in this whole ecosystem that is visible or on the horizon.
It is. I mean, see, when the bond market although didn't develop much, but when that came in, these kind of fears were there that public will start investing in the bond of the corporates directly. What will be the role of the banks if that reduces? But eventually, banks managed to find a space. The bond market is also there, and they have been able to create a space for themselves. So today, the lending by banks to AAA customers is lesser, because most of those AAA customers are going to the bond market or to the some other routes. So that forced them to come down to lower rated entities and find those assets to lend to. So these market changes will force banks to create some differential for themselves to increase their profitability. I think that's fine. It will just push them to innovate more.
Right. So the other aspect, that we were discussing, right, which is people's intention and crypto being kind of non-fiat, etc. While CBDC is fiat and kind of backed by the central bank.
Yeah, legal tender.
It's a legal tender, right?
Yeah.
But at the same time, like the information also is in control of the banks, right? So today cash can be anonymous, but CBDCs have a linkage and the transactions are noted.
Correct.
Right? So this will raise the key privacy concerns around the data privacy, and how do we ensure that there is transparency and security of the data, right? So Sanjeet ji, if you can share your thoughts around some of the concerns of CBDC, like especially on the privacy side, and also cyber security side, because it is very much related to technology and digital transactions.
I understand that's a pretty valid concern. One of the benefits of people using cash or cryptocurrency is that it gives them the privacy. So to that extent, that goes away the moment it moves to CBDC. That is very clear. I would say the element that it adds is it is much more secure, because with the backed by the blockchain technology, this is all transactions are noted, recorded. So there is a way to retrieve through any fraudulent transaction, keep control on it. So it is much more secure. But yes, the privacy definitely, the RBI will know all the transaction that is happening. To that extent, the government can have access to it. So that is for sure. My sense is, my understanding, I think that this entire framework has to evolve. It is still possible that for some smaller amount of transactions, some smaller ticket size, you can make it invisible. And the government can come up with those kind of, technically it is possible that you can make those transactions invisible, or it cannot be, clearly identified where it has gone. So to some extent, the government or RBI, while they're developing this framework, they can put those kind of technical, capabilities that for a smaller ticket size transactions, they can make it invisible, so that it doesn't get tracked in any case. But larger transaction, of course, even the government authorities would like to track that and see that those transactions are taken care of. And if moment you move to larger transactions, it is happening even today also. With the moment you add your PAN number, your Aadhaar card number everywhere, so it is getting tracked. The government authorities are in a position to track. So to that extent, for a slightly larger transaction, the privacy concerns are not very different from what it is today. Actually, it might be much more safer, because now it will be a centralized entity at RBI level who can control this and can regulate it, control it as to who can use this data. So the issue will be more about who can use this data, who can have access to this data, which the government, RBI, can come up with the guidelines and make sure that those are intended, these data are used only by a specific set of people for specific purposes. And if it has to be used by anybody else, there is a consent from the user which is taken upfront. So some of these things can be done to mitigate the privacy concerns. So I wouldn't say it is very different from what it is even happening today also. So unless you are dealing in cryptocurrencies, that is different. But for major transactions that we do, this is through banks. Your PAN card number, everything is there. Government knows all the major transactions that you undertake. So it is not going to be very different. Rather, it is going to be much more safer, that these cannot be imposed upon by just anybody. There will be much better control with the government, with RBI, in order to who can access it. And the consent from the users can be built into the system to protect that these are not shared with anybody.
So we spoke about government's, reason and benefits for the end consumer. So from a central bank's perspective, Sanjeet, how do you think CBDCs will impact the ability of the central bank or RBI to manage monetary policies? Right, and what challenges could this present?
I wouldn't think of challenges per se. Maybe it will be much more beneficial for the central bank, because a lot of data will be available to them.
Right.
So, for them to analyze the kind of transaction that is happening, which sectors, which products, where it is, who are the receivers. So the lot of enormous data which will be available to them, which currently is not there with them in cash transactions. So today they know what is happening through the banking transactions. So to a large extent they can pick it up, where the bank credits are going. So those data is there. Whatever is happening in the cash economy, that RBI it doesn't have a visibility to it. At least they don't have a direct visibility. So if we are able to move out a lot of these cash transactions to CBDCs, that visibility will improve for the bank. So RBI will be able to see those, they will to decipher some, pick up some strings from there, and tailor make the monetary policies to suit those requirements. So to a large extent, it will help them. It will aid them to make a much more informed decisions. From a, I understand the credit market will definitely have a, the digital lenders, like Rohiji says, they will definitely be a beneficiary, because a lot of these data will be available for them also to see the credit history of it. A lot of time, even CBDCs can allow for a targeted use of funds as well. So, it is possible that the banks or the digital lenders, when they're lending to somebody, they can make sure that those are used only for a specific purpose. So to some extent, the end use, which is an important issue typically in a banking system, that can also be controlled through the CBDCs. So, my sense is, overall, in terms of whether it is the quality of the borrowers, you will be able to do a much better judgment compared to the current situation. That will improve RBI's access to the data and ability to analyze, decipher which segment is receiving more, where the payments are going, and in order to tailor make the monetary policy accordingly. That will definitely improve. So to me, this is not really a challenge. It is actually going to be beneficial for them to understand the market better and customize the monetary policy accordingly. Yes, there could be issues which RBI will have to figure from a security perspective. I think that is the one aspect from a cyber security issue, which, because RBI ending up being as a custodian of this entire framework, they will have to think a lot, make sure that this is from a cyber security perspective, this is foolproof. They will have to be a step ahead of the possible challenges. So from a challenge perspective, when you say, I think this is an area, the challenge that whosoever takes up the role of a custodian of this entire mechanism, they will have to take in terms of cybersecurity, because that is a real risk that something goes wrong and if things, then the kind of impact that it can have on the economy and the entire payment system, it could be significant. So how do you make sure that such situations do not arise, and even if it arises, there is a backup mechanisms in place that, some alternate system takes over immediately, and creating those cybersecurity mitigants is the challenge that they need to really think of.
Right. So I think the impact of any effect that needs to be done, right, that becomes much more immediate because of the direct connect between like the central bank and the consumer, right? Whether it is monetary policy, that can be affected much more quickly, right? But at the same time, the risks will also spread very quickly. Great. That was inspiring, and I'm sure like there are a lot of ideas for somebody to pick and start even thinking about it and building maybe some of the frameworks right now, even before CBDCs become mainstream. Sanjeet ji, over to you. Like either again from from a policy or regulatory perspective, or from opportunities perspective, and both.
Okay. So to me, CBDC, when I look at, I'm looking at two different extremes. One is at a microfinance companies level, when they are going to rural sectors and they are self-help groups where they disperse money, maybe 1,000 rupees, 10,000 rupees, 5,000 rupees. So instead of paying them in cash, which has a lot of risk involved in it, if they can start paying them into these digital currencies. So you are getting so many people getting onto the digital world. That's the first thing. It's safe from a safety, security, and these microfinance companies can start monitoring the end use of those money. That if I've given 10,000 rupees of loan to a particular farmer or somebody in the rural segment, where that money is getting utilized. So which these are data which is currently they don't get it. If they are getting it, we don't know how much is truth or how much is being just fuzzed around. So so the entire micro lending segment can benefit a lot from the CBDC in terms of disbursement, in terms of in this form, in terms of recovery in this form, monitoring of the other transactions. So the entire thing, which is slightly constrained with a lack of information, that can really become much more transparent. So this is one end of the segment that I'm looking at, where a lot of positive impact can happen with the CBDC. And of course, the other end of the spectrum, when I look at the cross-border transactions, where there is going to be fundamental change that can happen. If we are able to eliminate or reduce that 5-6% transaction cost that is happening, that is required in the cross-border transactions. So if you see, there are two extreme, areas, but each of these are going to be the biggest beneficiaries of the CBDCs once it is pretty much fully rolled out in the market.
Okay, great. I think that's a good point to end, right? Which is, I think a lot of the focus has been on the benefits of CBDCs, right? There are opportunities on the underserved areas, cross-border, B2B payments. There are some risks involved, right? But I think the hope is that the regulators and the government would take care of that to a large extent. So with that, I think we can bring this podcast to an end. Thank you so much, Sanjeet ji, for your valuable insights and participation in today's discussion. I'm sure our listeners will find plenty of takeaways from today's conversation. We will be back very soon with another interesting topic. Until then, signing off. Have a great day.